Good afternoon. We are about to begin the press conference by the Governor of the Bank of Russia following the results of the Board of Directors meeting. This time, this press conference is being held online due to our measures to counter the coronavirus, which is quite unusual because we don't have correspondents attending in this room, but nevertheless the ones who have been accredited connecting themselves to the Bank of Russia line and will be able to ask their questions. To begin with, as is the custom, I'm passing over to the Governor to make a statement following the Board of Directors meeting. Good afternoon. Today, the Board of Directors has decided to keep the key rate at the level of the 6% per annum. Since the time of the previous Board of Directors meeting, the situation has changed drastically, primarily in the global economy and in world commodities and financial markets. Currently, events are evolving according to a scenario different from the implications of our baseline scenario at the beginning of February. I would rather say that today's Board of Directors was quite non-typical. First, we considered and weighed multi-directional options of the key rate decision. Second, in addition to the key rate decision, we adopted a whole range of measures aimed at maintaining financial stability, supporting households and businesses, and providing credit to the economy amid the coronavirus pandemic. With today's meeting not being a core one, this is exactly why we are conducting this press conference, where we want to clarify our assessment of the situation and the decisions made. First of all, I would like to talk about the nature of the current events and the peculiarities of their impact on the Russian economy. This, to a large extent, determines the logic of our decisions and measures taken. The situation today is really complicated throughout the world, and in Russia, the coronavirus pandemic and measures taken to contain it exert pressure on the global economy, which simultaneously reduces both output and demand and influences the behavior of businesses and households. Volatility in financial markets has surged. The pandemic developments were accompanied by a profound drop in oil prices caused both by a considerable increase in oil production and a considerable decline in its consumption. Uncertainty and concerns about further developments in the coronavirus situation may trigger a local elevated demand for individual durable goods and goods with extended storage periods. Though not able to produce long-term consequences, this makes price dynamics more volatile and may eventually bring about an increase in inflation and inflation expectations. Further ahead, in contrast, demand may weaken, thereby producing a downward influence on the consumer price growth rates. In turn, this slowing of the global economy made investors abandon risky assets. This exacerbated the volatility of capital flows and fluctuations in global financial markets and raised country risk premiums. Coupled with a sharp drop in oil prices, global volatility dragged heavily on the Russian financial market and led to the ruble depreciation. All this will have a pro-inflationary effect and may feed through into inflation expectations. Besides, a fall in the prices of financial assets and an increase in yields in the Russian debt market has been observed. Special attention shall be given to ensuring financial stability. Therefore, today, when making our decision on the key rate and the package of measures to support lending, we proceeded from the comprehensive estimate of all of these factors, from the balance of risks to the economy and inflation, and from concerns about ensuring financial stability. As for the key rate, I have already mentioned that we considered three options which we do very rarely, namely to cut, to raise, or to leave unchanged. Our understanding of the midterm inflation factors was in favor of a key rate cut. Over several recent months preceding the start of the volatility period, disinflationary factors prevailed in the economy. I should note that these disinflationary factors remain deeply rooted. Moreover, given the epidemic and preventive measures they tend to strengthen, individuals have few possibilities to buy goods and services, which translates into pressures upon businesses and eventually on household incomes. As a result, we may face a slowdown in demand growth. This explains why domestic demand-side factors are currently massively skewed towards disinflationary ones, not only in the short run, but also over a long-term horizon. Given the lagging effect of the monetary policy transmission mechanisms on the economy, as well as the absence of other meaningful factors, it would be admissible to cut the key rate now. Over recent weeks, similar decisions have been made by a number of central banks in the countries where such factors are in play. However, the balance of short-term risks has shifted towards pro-inflationary ones. Influenced by the weaker ruble, inflation this year will not only get closer to the target faster than previously anticipated, but may temporarily exceed it. It is obvious that the dynamics of financial markets and the risks of a possible further decline in oil price affect inflation and devaluation expectations. This makes it important not only to the inflationary spirit whirl up. Higher interest rates are advised to stabilize expectations. Besides, we understand that amid elevated volatility in the financial market, our monetary policy decisions may also affect financial stability. If we consider these factors alone, a decision to raise the key rate would be appropriate. The decision that we made to keep the key rate unchanged in the current environment balances the impact of short-term and mid-term factors, risk to inflation, to the economy, and to financial stability. We expect that a possible temporary hike in inflation and a drop in economic activity in 2020 will be followed by an improvement in economic dynamics in the future, and inflation will return to the target close to 4% in 2021, taking into account the current monetary policy. As for the signal for the future, we will continue to use the same logic when making decisions by assessing each time the balance of factors and the balance of risks associated with making decisions on a case-by-case basis. I would like to reiterate that the key rate decision has been made in conjunction with other Bank of Russia measures aimed at mitigating risks to the economy and supporting our citizens in difficult conditions. The Bank of Russia is now introducing a broad range of additional measures to supplement the initiatives already adopted. These measures, in the first place, are designed to ensure financial stability and maintain the financial sector's ability to provide loans to the economy, especially to those individuals and businesses who are especially vulnerable in this situation. These measures will support lending to small and medium-sized businesses, mortgage lending, and help protect the interests of the citizens who suffered from the coronavirus outbreak. We understand that both financial institutions and borrowers will need some time to adapt to the new environment. That is why we took measures to strengthen the capacities and abilities of banks and other financial institutions to restructure and prolong loans to households and enterprises impacted by the pandemic. We will make online payments more accessible for households and support online retailers. Besides, we work closely with financial institutions, and no matter what happens next, the smooth operation of the financial sector and the accessibility of financial infrastructure will be ensured. Other countries have already experienced this, and we build on that experience. We have developed respective recommendations. We give individual attention to major financial institutions and cooperate with financial market associations and self-regulatory organizations, keeping track of how they develop and implement respective measures. To facilitate transition to remote work mode for employees, we seek to temporarily relax reporting requirements. We have also temporarily suspended inspections, excluding cases that require immediate response. It is worth noting that unlike key rate changes whose pass-through on the economic processes comes with a certain time lag, regulatory easing has a faster and more targeted effect, much needed for timely and preventive influence. In addition to mitigating financial stability risks, the implemented measures will curb the unfolded tightening of internal monetary conditions amid global volatility. We are working closely with the government to be able to ensure real-time information exchange, to develop comprehensive measures, if need be, in order to alleviate the impact that negative factors may have on households, the economy, and the financial sector. Thank you. Dear colleagues, we're now switching to Q&A, simply because the correspondents are not present here. Let me read out their questions, which we receive in real time. And so the first one we received from Gulnara Vahitova, RIA Novosti, RIA News. In the central bank's press release following the results of today's board of directors meetings, it says that a moderate economic growth in the beginning of the year may change for an economic activity decline in the forthcoming quarter. Does it mean that the central bank forecasts the start of recession in Q2 this year already? Well, usually something of a recession is being applied to a negative economic growth rate several quarters in a row, at least two. And we do see that the economic growth rates in the second quarter this year may slow down. And during the second quarter, most probably, the rate is going to be lower than in the first one. But the annual growth rates, we are inclined to think, will remain in the black. Now, in terms of what the situation will be in the third quarter, will be dependent upon many circumstances, which I've mentioned above. We act on an assumption that in Q3 we will see stabilization, taking into account the measures which are being taken both by the government as well as the central bank. Thank you. Elena Fabrichnia, Reuters. The tone of the press release was conceived by many as quite mild. Does it mean that the key rate is not being considered to be raised by the central bank in the foreseeable future? I already mentioned that we looked into three options of what we were to do in a very scrupulous way. And there is a certain logic behind each decision taking place. And so we feel that the issue about raising the key rate is not off the table. So we should not rule out that there might be very stable inflationary factors forming. We will monitor the risks to the financial stability, which usually turn to be pro-inflationary sector factors. So we don't exclude that at an immediate board meeting we might reconsider it again. The next question comes from Anastasia Stilova, Interfax Agency. The central bank allows for the inflation in 2020 to temporarily be above the target level of 4%. To what extent inflation may be above the target, and at which point in time it may be at its peak value? Should we expect a response from the central bank towards the expected above inflation marks, or the regulator won't respond to it, considering this not to be a stable phenomenon? Based on our estimate, the peak of inflation may reach, the peak in Q1 next year, which is brought about by the base effect, because currently we are going through the lowest inflation level, as well as the weakening of the inflation effect upon the current exchange rate being carried forward. But nevertheless, we do not believe that it will exceed it tangibly, again, because of the low inflation rate, because currently one may say that, as far as this is concerned, we still have some room. And our reaction, and this is something that we mentioned more than once, the inflation getting away from the target, we respond when inflation, in a meaningful and significant and stable way, veers away from the target, when we see the risk of secondary effects. So we will definitely watch over this situation. But there's no guarantee that there will be a need for such a response. Thank you. The next question comes from Dmitry Butrin, Kommersant newspaper. What are the current estimates by the Bank of Russia about the weighted key rate level? Has it gone up or down, or stays unchanged? We haven't reconsidered right now our expectations for the weighted exchange rate, balance exchange rate, so that remains as it was, 2 to 3% in real terms, as has been mentioned previously, closer to the lower threshold. Andrei Ostrov, Reuters. If the borders in Moscow and in other cities are closed and an emergency is going to be announced, how that may affect inflation? Is central bank confident that won't bring about a double spike of the gasoline prices and food prices? We do not envisage dramatic risk for any stable price growth overall and per individual staples, because indeed we have different factors at play. Some of them are pro-inflationary, quite understandably. People are trying to procure, and there is a higher demand for some produce, the one that is not perishable in the first place. So this is a bit of a shift, to the left, sort of an advanced kind of a procurement that people would otherwise be buying anyway. So they're stocking up, and so on the contrary, there could be some disinflationary factors appearing and emerging, and we do expect that that might be related to a possible later demand decline. And a question from Bloomberg, Anna Andrianova. How deep the economic decline this year may be in Russia? And we're interested to hear your new forecast, the base one and the risk one. What kind of oil price level do you put in? Can one describe the current economic situation in Russia as a crisis? We are of the opinion that it's not guaranteed that, considering the year-end results, there would be negative rates, because right now we don't expect the economic decline to really kick in. We are going through the process, and we will be further assessing our forecast for the next core meeting of the Board of Directors, which is going to be on April 24th. But right now, we'll underscore that currently the situation is developing with a big difference from our original expectations. So we will be reviewing our oil price expectations as well. In terms of how one should describe the current environment, I believe it is proper to do so once this period is over, because this is a difficult period indeed. And most importantly is that we've approached this period with some well-stored and accumulated buffers and the financial system stability. We have a toolkit in order to mitigate this risk, not only to mitigate them, but similarly to support the economic activity and lending in such an environment. Thank you. Tatiana Chubasova from Interfax Agency. Her question is the Bank of Russia considering the issue of reducing the mandatory impairment and reserves, including the foreign currency denominated obligations, as well as the contribution into the mandatory insurance fund? Well, you may have noted that today we have adopted a whole set of measures and various regulatory easings, amongst which there are no measures like the ones that have just been mentioned, like reducing the rates into the Deposit Insurance Corporation. And maybe I would like to underscore the following thing, because our current regulatory easings are very much different from the ones which we took on in 2014, even if some measures do look alike. The fact of the matter is that back in 2014, we witnessed the need to support financial stability of the financial institutions, so we offered some easing for them to be able to adjust their financial performance to the new environment, because right now, primarily, our regulatory easing is aimed at supporting and incentivizing the banks to lend to the economy, to lend businesses and households in terms of there being a need to support financial stability. I mean, there's no need as such, because overall the financial system is quite stable. It has certain capital resilience and accumulated buffers, in such an area as a systemic importance, as well as the capital conservation buffers, which altogether account for about 2.3 trillion, something that the banks can utilize right now. But for that to be able to happen, you have to reduce the executive bonuses and other things. But right again, I will say that we do undertake measures aimed at supporting the lending activity. The next question comes from Margarita Spilevska from TASS Agency, and actually she also is recalling 2014. Will the list of systemically significant banks be expanded? Will there be a need this year to additionally capitalize the banking industry like the case was after 2014, because the banking market have the banking market players asked the central bank for such a support. We do not see any need to review the list of systemically significant financial institutions, because as such we may be considering possibly the list of criteria, but this is definitely unrelated to the current situation, neither in the domestic market nor in the global market, because we're talking about various specificities and the need to make things more clearer. We don't see the need for additional decapitalization. We do run stress tests, and we will continue doing so in the first place to be able to understand the way the whole of the banking system may evolve, and individual banks in case the hardest risk scenarios emerge. And the stress tests do show that the financial system is stable, even if there are certain problems. They're very localized, and so we do not need the need for additional capitalization. Nobody has asked us for that. Anna Kaledina from Izvestia, she also has a question about the support measures. So what she's writing is this: these measures are insignificant for the households, and they do apply only to those who contracted coronavirus, like, for example, restructuring and delays in repayments. Is there a probability that all those who found themselves in dire financial conditions may receive this support? If positive, in what way? Does the regulator have any plans to support consumer lending to further develop the consumer demand? This package of measures may indeed be expanded depending upon the way the situation evolves. Currently, we have focused upon specific measures which we thought to be evident. And again, I shall reiterate that we work in close contact with the government, because the government is pursuing their own measures, purpose-specific and individual-specific and business-specific measures as well. But nevertheless, yes, what we act upon is an understanding that the banks and the financial institutions would take into account this difficult situation that some of their customers may end up being in, because in the majority of cases it may be a temporary thing. So to restructure, to prolong loans, and so we offer our specific regulatory measures as well as incentives, and that won't present an additional burden upon the capital and the reserves. I mean, in specific cases where we see that in the individual industries and cases, these kind of consequences ensue because of the pandemic. And as far as the consumer lending is concerned, we ought to take a look at the situation, because we don't have enough immediate data in terms of what might happen to the consumer lending. But I would like to note the following thing. We do not believe it right for the economic growth or for the demand to be supported at the price of the people having huge debts, to take more and more of them without understanding how to serve them, because we introduced the debt burden ratio and an indication of that, specifically not to allow for the risk to the financial stability, but amongst other things not to allow for any social consequences when over-credited individuals are digging themselves deeper and deeper into the debt pit. So we're going to monitor it, but in the meantime we do not see any need to take these measures away. Anton Feinberg from RBK. When working on the Sberbank divestiture deal, essentially Sberbank put in a new cut-off price, which is $25 per barrel. Why specifically this particular price mark, and can it change in the future? Well, indeed, the fiscal rule has been and continues to produce stabilizing effect upon the economics and all the indicators. So cut-off price, it was $4 plus $42 per barrel. But we do see that the stabilizing effects of the fiscal rule may diminish as the price deviates downwards further and further from the cut-off price. And that is why, as part of the Sberbank sale transaction, we thought it possible, in order to reduce volatility in the FX market, I mean, without defining and setting the exchange course, without protecting some kind of an exchange course, but to reduce the volatility in the foreign exchange market during this period, to fully compensate the effects related to the foreign currency income as the revenue for the exports of oil and gas, the ones which are related to the price falling below $25 per barrel. So this is not a new price, it's a new cut-off price. This is a strengthening of the stabilizing effect of the fiscal rule against sufficiently low prices. And the next question came on the very same topic, Elena Fabricna from Reuters. How many times the daily volumes of sale may grow because of the conversion of the National Wealth Fund releasing money for this particular deal? The formula that we have will depend upon how much the price fluctuates within the 25. So these values, all of them basically will be disclosed with a bit of a lag, but that would all depend upon the oil market environment. The next question comes from Roman Markelev, the Russian Gazette. Is the Bank of Russia planning to revert to a full cycle of the key rate reduction after the volatility in the market subsides? Can one state that that may happen with a great probability, but not sooner than the Board of Directors meeting in July? Indeed, we do see in the midterm outlook a certain potential for the key rates to be further reduced. As I have previously stated, our midterm assessment has shifted towards where we see that disinflationary factors are prevailing. However, there are short-term inflationary factors that are at play. Additionally, there is an instability in the financial markets that we referred to. So once we will be able to again consider the possibility of reducing the rates will be fully dependent upon the way the situation evolves that we're going to monitor. So to quote any particular time frame will be inappropriate right now. Svetlana Yastrebova from Vedomosti newspaper. How does the Bank of Russia view the fact from the monetary measures which have been adopted by the Federal Reserve and the European Bank? Do you agree that as far as the manufacturing sector, these measures may have a limited effect? What kind of model the Russian economy may follow? Would it act through the monetary measures or put an emphasis upon various fiscal stimulus? The combination of monetary and fiscal measures, please do not forget about the structural measures as well that are out there, would depend upon a specific case, upon specific challenges, in response to which different measures are being taken. So we currently do see that the European Central Bank and the Federal Reserve are encountering issues related to the functioning of the financial markets, financial stability, liquidity, and therefore certainly they do apply monetary measures. Understandably, in many mature economies, the arsenal of such monetary measures and the potential for their application is restricted due to the fact that the rates are at the historically record low levels. And of course, in order to further incentivize economic development in many countries, incentivizing manufacturing sector is where the fiscal measures are being applied in the first place to support the demand. And so in our case, we also have to follow the combination of the monetary and fiscal measures. And therefore, I do think that in cooperation with the government, each one would be responsible for our area. We would be applying these measures depending upon how the situation develops. Another question we have received from Anastasia Shtilova from Interfax. An information has come out that the United States are debating possible sanctions against the Russian oil industry to support the global oil prices. Does the Bank of Russia take this risk into account? Has it discussed this with the Russian government? How strong is the probability of this? It's difficult for me to assess this probability. The only thing that I can repeat is that for several years in a row we've been existing in a continuous sanctional environment. There are rumors about new sanctions. There are decisions that are being taken. We are very well aware of these challenges. So the most important thing for us to always have a certain safety cushion in terms of the stability of the financial system and the overall economic stability in order to be able to react to such challenges. And so the financial system stability has become stronger. We do take these things into account in our risk scenarios, so we will revisit these estimations as the situation evolves. Gulia Vahitova from RIA Novosti asks the following question. The Bank of Russia has recalled a signal about the further rate dynamics from its statement. Does it mean that the regulator looks at the possibility of unscheduled or extraordinary rate decisions. Well, there are many scenarios that currently are in our minds, and we today, as I've previously stated, have looked into different rate actions to raise, to reduce, and to keep it unchanged. So different scenarios are possible, but in as far as the extraordinary Board of Directors meeting, it is extraordinary in essence because it is impossible to say exactly when it will be convened. Thank you. Anna Kaledina from Izvestia newspaper. Isn't the Bank of Russia planning to buy out the OZ? These are the proposals that we have been receiving from the market players, from the financial institutions. This kind of an instrument kit we do have in our arsenal because it's quite a broad one in terms of different measures that we can resort to. But right now we don't see any need in it because the yield curves, in as far as the OFZs are concerned, are changing in correlation to the changes taking place in the market. So we do follow it, and currently we don't feel there is any need to do something about it. Anastasia Stugny, The Bell publication. What is the way that the Bank of Russia looks at the risks of the capital flight and what it will do if these risks manifest themselves? Well, quite a considerable share of foreign investors we find in the government debt market, because our government debt used to be quite an attractive one due to the fact that the macroeconomic situation was correlating to it, but we do not see a capital flight as such. But investors do withdraw from our debt, but this, amongst other things, is conditioned by the need for liquidity, because this is not as much as a flight from the Russian jurisdiction that the investors are deciding on. We don't see it a big problem, because many times we have assessed it, and all of a sudden there's a big outflow of capital from the government debt. Certain limited consequences, in the first place, are explained by the fact that the government debt itself is not a big one. It is limited, so we do not expect any major effect. And we do see that the foreign investors, if any turbulent events take place, they walk out and they come back again. And that was the case in 2018, if you recall this volatility, because of the new sanctions being introduced. So there's nothing dangerous in it. Once again, I shall remind you that the government debt in our country is considerably lower than in many other countries. Thank you. The next question is from Alexander Ilina, RBK TV channel. There are more and more countries which currently, as one of the anti-crisis measures to support the economies, resort to direct payments to the households. What is the way that the Russian Central Bank is looking at this possibility? Well, many countries go for it when all the other measures are exhausted. The rates have been lowered down to zero or to the negative area. Massive programs of the securities buyback when the balances of the central banks are being bloated, when it ceases to produce any effect upon strengthening the demand or lending activity. So this is the subject that is being debated, but it is very difficult to fully understand what positive effect it might produce. Many questions and issues because the government will be given by the government, and that respectively would bring about certain consumer behavior and would incentivize demand. But in our situation, we certainly do not see a need for it, because we still have the rate way, so to say, to go, and other measures which may enable us to support our household as well as the consumer demand. And once again, I shall underscore that this is to be done only together with the government. The next question comes from Irina Churina, the Tver Vedomosti. Well, raising the rates may lead to further decline in the demand for the mortgage loans and completely make the young families unable to buy new homes. Well, of course, the development of the mortgage market is a very important long-term trend, and we do see that the mortgage products and the mortgage market is developing quite actively. Currently, because of the environmental changes, we do see that some of the banks started raising their mortgage rates. And by the way, that happens without us changing our key rate. It's simply that the bond yields have, government bond yields have grown. But nevertheless, in order to support this market as well as the mortgage lending, we have adopted measures, including in the today's list, and we have included the bond mortgage into the Lombard list, so allowing you to be put onto the Lombard list if these mortgage securities do correspond to certain quality requirements. And secondly, we changed the markups for the macroprudential markups with respect to the loans with a low introductory contribution, because we had some very serious restrictive measures when the original contribution was less than 20%. Right now it's between the 20 to 15%. So this is a bit of an easing, but nevertheless we do think that it is very important to further monitor the quality of the mortgage loan, because there has to be an original contribution by a household or by an applicant. And so we do hope that despite such temporary difficulties, the mortgage market is going to develop, because there is a government program in place, different kinds, which supports the mortgage lending very individually specific. We have changed our regulations somewhat in order for these government mortgage programs to be effective, and so that the banks could apply them without any extra burden upon their capital and reserves. So the regulation has been adjusted to make it happen. So we do hope that the mortgage lending will continue further. Thank you. And there is another question to this particular topic. Roman Markele from the Russian Gazette. So nowadays, what is the way that the Russian bank considers the potential to reduce the mortgage rates in 2020? Should we expect them to below 8% to be delayed, and or is it possible to see the rates below 8% this year? Yes, we have considered the potential to reduce these rates below 8% within the period up to 2024, and so this potential still remains. Now, in terms of how the rates are going to behave themselves this year, in many ways will depend upon the situation. The next question comes from Anton Feinberg from RBK. Will the Bank of Russia delay its negotiations and getting ready to the deals related to the sale of the administered banks? And No, we're not delaying anything, because we're collecting the applications to sell the Asia-Pacific banks. Yes, we continue to collect them. We also work with investment advisors about putting together the best strategy from divesting from the Discovery Bank or Krytia Bank. We will certainly be looking into the station in the market, but currently we are working according to our schedules. So again, I would like to reiterate our very firm resolution to help the situation get resolved. Andrei Birikov from Bloomberg. Schools are getting closed, universities and many offices are having their employees work remotely. Do you allow both for the exchanges and the markets partially closing and not working? If yes, in what kind of situation? Why it is important for the exchanges to remain open compared to other basic infrastructure facilities? No, we do not envisage such a situation, and we do not allow for it. We are working together with the financial institutions and infrastructure entities in order to provide for an absolute continuation in the operation of the financial infrastructure. There are many measures, and we are learning from the international experience, because it is quite diverse, and to be able to prepare ourselves as best as we can. And so developing the remote modes of work. I mean, it is not possible in every case, because there are certain situations where you have to be physically present, and there are certain shift schedule, and certain. So we definitely do not allow for the possibility of the market closing down completely. Two questions in a row about the exchange rate. Roman Markel from the Russian Gazette is asking, Does the Bank of Russia has a certain psychological threshold in terms of the ruble exchange rate, when reaching which the regulator will undertake extraordinary measure to stabilize the exchange rate? Andrei Osterov from Reuters. What is the way that the central bank may comment on the expectations that the ruble may depreciate to 100 rubles to a dollar against such a low oil price and coronavirus? Well, we have a floating exchange rate. We are not commenting on it, but nevertheless, no kind of a psychological threshold being some sort of a trigger in order for us to undertake any measures about the exchange rate. There are none. Without doubt, we are monitoring the situation in the FX markets, over all of the financial markets, in order not to allow for any risks to the financial stability. So we've got a full kit of what we can do. In amongst other things, I shall remind you that one of the regular interventions that we undertake as part of the fiscal rule does provide us with the currency interventions into the markets in case there is a need for it, but there is none just yet. Margarita Spilevskaya from the TASS agency. Today, the Bank of Russia announced about restricting the banking fees in the fast payment system for the end users. How long that particular restriction would apply, or is it timeless? Well, we will follow the situation, but currently we believe it is a principally important thing to introduce such restriction because the need in remote payment, online payments, has considerably strengthened. So we need to allow people to be able to enjoy doing it easily, and that is why we decided that we should resort to the possibility of using our authority to restrict the fees for such payments, and then we will be revisiting it later on. Dmitry Butrin from Kommersant comes up with a traditional for himself question. Have there been any discrepancies during the voting by the board of directors? Have there been any special views? We are not disclosing the way that we have been casting our votes. Nevertheless, once again, I would like to underscore that we, in a very detailed way, discussed all the three options, all of the arguments, all the pros and contras, and so we had everything on the table, and all of the board of directors, discussed them very, very thoroughly. Well, dear colleagues, our press conference time is coming to an end. I suppose this will be our last question from Anna Andrianova from Bloomberg. When the government in March was making a decision about the OPEC Plus deal, and after that the agreement was terminated, has it asked you for advice? I mean, the Bank of Russia, and have you expected that termination of this deal will bring about such a plummeting of the oil prices? Without doubt, all the topics related to the future of this particular agreement have been debated, have been discussed at different venues. I think that the effect from the OPEC Plus, the way it is right now, from withdrawing from this deal, has been much strengthened, if I can put it this way, by the global financial market environment, by the coronavirus pandemic, the way it affects supply and demand, and in this sense this situation is far from being a straightforward one, because the demand is growing in the oil market, particularly there being already a surplus, and simultaneously the supply is growing and the demand is falling. The most important thing for us is to be ready for any way that the situation may evolve, for the accumulated financial stability that we have in the banking industry, overall in the economy, which will allow us to sustain. Thank you very much.